everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. And today, we're taking a look at the EMD. Now, if you're not super familiar with the EMD, it's a relatively newer futures market. It was introduced back in October 2015, so it hasn't been around for a ton of time, but it is the S&P Mid-Cap 400 Futures. So a really good market, very volatile market. You can get some pretty nice moves on here. And today, there was a lot of opportunity across the markets, not just this one, but pretty much all of them. Everything was moving. Thank you, finally, right? We're finally getting some movement. So looking at the EMD, we just rolled over today, which means that the volume from the day prior is going to look a little bit sparse and weird, but we opened up with a gap higher, nice gapping to the upside, and a very weak bear candle to start the day off. Then we have a very weak bull candle, and then we have a really strong bear candle that completely fell apart, right? So putting it in context, what do we have? Well, we have a new low into a new high, into a big strong new low, and then completely fails and goes back up. What are we in? We are in a range, ladies and gentlemen, looking to buy low, looking to sell high, and trying to stay out of the middle. And a beautiful buy candle off of the lows allowed a quick spike up right into the prior high of day for the objectives up. Now, once we hit that objective, where are we now? Well, we are at the highs, and we're looking to fade that move back to the other direction. We just saw a move down, a move up, a move down. Now we're up. We're probably going down, right? That's kind of the way that this works. Generally speaking, like I always say, I don't want to be the first one to the party. I would much rather let the sellers kind of put their money on the table first, and then I'll join them if I see excess proof. And then we get that right there, right? They come back up, they tap that prior high of day as resistance. Notice they couldn't close above it before, and then rocketed to the downside with a big bear engulfing candle lower. And that allows sellers to scale in, drive the market further down. If you didn't want that one because of the amount of risk that you may have needed for the stop size, we get a weak bull bounce into a complete failure once again. Sellers swarm all over that to drive the market lower. And we rinse and repeat. Another bull attempt and another strong rejection, this time back below the moving average. And if we just broke the highs, where are we going? We're probably going to break the lows. So we're looking for a little more continuation to the downside, and that is what that one offered you. Now, this is where things get a little bit interesting, because now we essentially have a cycle down, up, down, and we're at a new low, right? This is where we want to be looking to buy. But there aren't any strong indications of buyers showing up. Nobody's showing up on the market, on the book. No buyers are really showing up to the party yet. And we can see that by really strong bear response, really weak bull response, followed up by another really strong bear response. It looks like they may be trying to fill the gap, maybe just trying to get a breakout down one last time. And that is why that final sell is there. Quick little drive lower, finishes off that objective, and then we start meandering sideways. Now, I do like this one right here, but it's a very weak candle. And generally speaking, when I'm looking to get into a trade, I want the strength on my side, right? I don't want to be trying to fight against the strength. And even though we are looking to be a buyer here at the lows, we have the gap fill, we have everything else. They couldn't close above that gap, and there were just a little too many causes for concern. If you took that one, I can't really say I blame you, but it's not really up my alley. Now, we come back to the highs where we initially saw that breakdown, and the buyers couldn't get above it. We failed there, another buy attempt, that fails to go, and then we get a trap on the highs. So not only is it a trap on the highs, it goes one tick through that little bounce right there, and it goes just a few ticks above that high. It not only does that, but it also closes on its lows. A very strong bear interest in the highs. The buyers just don't have it. They had their chance to come in, and now they're failing. So I like that as a sell move, trying to get back down to the low a day. It faltered around a little while and then gave you a nice breakout to re-enter with potentially more for a finalized move down, and that's where we are now. So overall, just a phenomenal day of price action in general. The market's moved really well today. Hopefully you had a good day of trading, and if you didn't, learn from the mistakes and come back the next trading day stronger than ever. That's going to do it for this one. Hopefully you learned something. Hopefully you found it useful, maybe a little bit entertaining, and we'll see you next time.